Hello guys, welcome to Bhavna's Online Academy. So today we are going to learn the chapter of company audit. But before we start the chapter, I would like to tell you for what weightage this chapter comes in the exam. In audit exam, you have a chapter number 5 which is related to fraud, and chapter number 10, that is the company audit. These both chapter come for 15 to 20 marks in your exam. So this is the importance of this chapter. So let's start. So company audit. First, before we proceed into the chapter, we need to know what is company audit. What does the name of the chapter means? So doing an audit of a company will be known as company audit. That we all know. But it is not doing the audit of the company. It is doing the audit of the company's financial records. Financial records is known as company audit. Okay. So an audit that examines your business financial record to verify if they are accurate. So a company might have prepared as financial records. So this company audit, what the company auditor, what he will do is he will go and check the financial records. That is what is the company audit. Okay. So in this chapter we are going to learn on aspects of two auditor. One is the statutory auditor and the other one is the cost auditor. So the whole chapter will be of statutory auditor, and the last there is only one part which covers cost auditing. Okay. So whenever you read this chapter, just keep in mind all the provisions are related to statutory auditor. Okay. Okay. So let's get into the chapter. So first what we are going to see is the qualifications and disqualifications of an auditor. So what is qualification? Qualification means the people who are qualified can only be an auditor. Disqualified means people, if they are disqualified, they cannot be an auditor. First what we are going to see is the qualification. Qualification is covered under section 141 subsection 1 and subsection 2, whereas disqualification is covered under section 141 subsection 3. Okay. So first we are going to see the qualification. So first what it says is a person who is a chartered accountant can be qualified to be an auditor. So a person who is a chartered accountant can be qualified to be an auditor. So here the question is, can any chartered accountant be qualified to be an auditor? Can any chartered accountant be qualified to be auditor? The answer is no. Only the chartered accountant who has a certificate of practice with him can be qualified to be an auditor. So to be an auditor, you need to be a chartered accountant. You need to have a chartered accountant degree, plus you also need to have a certificate of practice. If you are only a CA and if you don't have a certificate of practice, then you will not be qualified to be an auditor. Okay, this is the criteria for individual to be an auditor. Okay. In a company audit, there can also be firms who can audit, who can be auditor. So there are two things. Individual can also be an auditor, and also firm can be an auditor. In case of individual, as I told you, a person who has CA plus COP can be qualified as an auditor, whereas in firm there are two. One is partnership firm and the other one is LLP. In case of firms, there is a rule where if the majority partners of the firm, if they are CA plus COP, then the firm can audit. I'll give you an example. Example, if there are 7 partners, partner A, B, C, D, E, F, G. Okay. If suppose in this, these 3 partners only has CA plus COP degree. Okay. The other 4 partners are only CAs. They all work in a firm called ABC Limited. Now the question is, can this ABC Limited be qualified to be an auditor? The answer is no. Why no? Because the majority of the partners, so in this firm there are 7 partners. So majority means 4 partners must have a degree of CA plus COP, whereas in this firm only 3 partners have the CA plus COP degree. So this firm will be not qualified. Suppose even D has a CA plus COP degree, means they form majority of partners. That means 4 partners. That means majority partners in a firm have CA plus COP degree. That means this firm can now be appointed as an auditor. Okay, so a firm, if it has majority partners who has CA plus COP degree, then a firm can be appointed as auditor. Okay, so there may be 2 types. One is partnership firms, and then it is LLP. Okay, this is the qualification. Next, what you have to remember in this is that in firm, only the partners who have the CA plus COP degree, only the partners who have CA plus COP degree will be eligible to either act as auditor or sign in the audit report. Okay, suppose what happens is ABC Limited is given a appointment as auditor. Okay, and what happens is Mr. A, who is just a CA, comes forward and tells that this time I will do the audit, I will sign in the audit report. Is this possible? No, this is not possible. Only the members or only the partners who have CA plus COP degree can either act as auditor or can sign in the audit report. So that point also you have to remember. Okay. So next we'll move on to the disqualifications. So in disqualification, these are the persons who shall not be eligible as an auditor. The first point is that a body corporate other than a LLP registered under the Limited Liability Partnership Act 2008, they are saying. So what it means that body corporate shall not be eligible to be an auditor. That means what and all is included in body corporate. In body corporate, it will include Indian company, foreign company. These both are included in body corporate. That means these both will not be eligible to be an auditor. Okay, an Indian company cannot be an auditor. A foreign company cannot be an auditor. Whereas a partnership firm and an LLP can be an auditor. Okay, here they have told other than. In other than, what they mean is, it says that LLP which is registered under the 2008 LLP Act, they can be auditor. 2008 LLP Act is an Indian Act, which means an Indian LLP can be an auditor, whereas a foreign LLP cannot be an auditor. I hope this is clear. Okay, Indian LLP can be auditor, whereas a foreign LLP cannot be an auditor. Okay, we'll move on to the next point. An officer or employee of a company cannot be an auditor. So who are considered as officer of a company is a director or the manager or key managerial person and any other person by whose instruction the board is accustomed to act. That means for a company, who and all will be officer? A director is officer of a company. A manager will also be known as officer of a company. A key managerial person will also be known as officer of a company. And also any person by whom the board is accustomed to act, that person will also be known as the officer of the company. Okay, now we'll move on to the example. Suppose there is a company called Bhamna Limited. Okay, in that Bhamna Limited, I am the director of the company. What the ineligibility criteria says is officer or employee of a company cannot be the auditor of the company. So that means I am an officer of the company. If I am director of the company, that means I am the officer of the company. Can I audit the company? The question is, can I be the auditor of the company? The answer is no. You cannot be the auditor of the company. Suppose if I am not an officer, I am just an employee of my company. If I am just an employee of my company, can I audit the company? No. In that case also, you cannot audit the company. That is what is written here. Okay, the next point is that the partner or employee or officer or employee of a company cannot be eligible to be an auditor. What this means is, okay, suppose I am the director. What happens is, I am also a partner in another firm called the ABC firm. I am also a partner in the ABC firm. There are two other partners, A and C, in that firm. Okay, what it says is, the partner or employee of officer or employee. So the partner, so I am the officer here. Who is my partner? A and C are my partners. So the partner of the officer can also not be a auditor. This is what they are trying to say here. So partner or employee, they can also be my employer, they can be my partner. Partner or employee of the officer or employee cannot be able to be the auditor. Okay, that is what is said in the third point here. If suppose I want to audit Reliance Industries. Okay, suppose I want to audit Reliance Industries. Is it possible? Yes, it is possible. I can only not audit the company in which I am either officer or employee or partner employee of officer employee. Here there is no connection. So I can audit Reliance Industries. Okay, we will move on to the next point. Okay, so this next point has three subdivisions. So the first one is that what it says is a person who or his relative or partner. Person, that means the auditor himself or his relative or his partner. The auditor himself or his relative or his partner who is holding security or interest in may also not be eligible to be an auditor. What they are trying to say is, and suppose suppose I am the auditor, okay, and I am going to audit Bhavna Limited. If I am going to audit Bhavna Limited, in that case, I must not hold any kind of shares or security in this company. I must not hold any kind of shares or security in this company. Not only me, even my relative or my partner, they also should not hold shares or security in this company, in the company which I am going to audit. Okay. If any of us hold any shares or security in this company, then the auditor, whoever is appointed, will be ineligible. Okay. So here what they say is security or interest. Security means, security word is here used for the companies who have share capital. Okay, and the word interest is used for companies who does not have share capital. So in Reliance Industries, which has a share capital, I can use the term security here. I should not hold any security in Reliance Industries. So I'll take the example of a club. If there is a club, in that club, if I'm a member, okay, that the club does not have share capital, okay. In such case, it will be said that if I'm a member in that club, it will be said that I have an interest in the club. So if I have interest in the club, then I cannot be an auditor of the club. Okay, that is what is meant here. So, person holding shares or security or interest in not only the company itself, but in its holding also you should not hold, in its subsidiary also you should not hold, in its associate also you should not hold. Person, relative or partner, we'll call it PPR. So, a PPR should not hold security or interest in the cash companies, means the company itself, cash, the company itself, the associate, the subsidiary or the holding. It must not hold any security or interest there. But there is an exception here. Now we'll understand what is the exception. Here what the exception they have given is for relatives. Suppose what happens is I got a audit in Reliance Industries. Suppose I got a audit in Reliance Industries. What happened is that my relative did not like it. What he does is that he goes to the Reliance Industries and buys some shares of Reliance Industry. Okay, in such case, then I will be disqualified because my PPR should not hold any security or interest in Reliance Industries. Okay, in the firm which I am going to audit. So here what the exception is that the relative can hold up to shares or security of 1 lakh rupees face value. 1 lakh rupees face value they can hold, not market value, face value. Up to 1 lakh rupees market face value if they are holding in the Reliance Industries, it's okay. If more than that they are holding, then I will be disqualified. Up to 1 lakh rupees face value if the relative holds, it's okay. But if the auditor holds even 1 rupee face value share, disqualified. Even if the partner holds 1 rupee face value share, disqualified. For relative only, it's up to 1 lakh rupees. Okay. So that is one exception. And the same the case of security also. Here what they have said is, it happens is, until I was appointed, there was no shareholding by the relative in the company. But after my appointment, what happened was that the relative bought 2 lakh rupees face value share in Reliance Industries. So what the act says here is that in such case you will definitely be disqualified. But we will give you an exception. What is that is, you will give you 60 days time. Until that, go to your relative and try to convince him. And convince him to reduce his face value to 1 lakh rupees. If he reduces, then well and good. No problem, he can still be our auditor. If he does not reduce the face value of the shares or security within 60 days, then on the 61st day, you will be disqualified. You cannot audit the firm. On 61st day, you will be disqualified. That is what is said here. Okay, that we have understood the first point. The second point, where what it says is the PPR is there. No, if they are indebted to the cash companies for a value in excess of 5 lakh rupees, in such case also they will be disqualified. That means person himself or the partner or the relative, they must not take loan of more than 5 lakh rupees. Up to 5 lakh rupees it is okay, or less than 5 lakh rupees it is okay. More than 5 lakh rupees you should not have taken a loan from the cash companies. Okay, so this is one point. If you have taken a loan of, or if you are indebted for more than in excess of 5 lakh rupees, then you will be disqualified. What the next point is, what next point says is that the person himself, that is the auditor or the partner or the relative, suppose there is a third party who has taken a loan from Reliance Industries, okay, and for his loan, any person from PPR has given a guarantee. In this case, you have not directly taken a loan, but you have given a guarantee for a person who has taken loan. In such case, guarantee up to 1 lakh rupees, it is okay. If you have given a guarantee up to 1 lakh rupees, it is okay. If it exceeds 1 lakh rupees, if the guarantee exceeds 1 lakh rupees, in that case also you will disqualify to be an auditor. That is what they have said here. PPR, the guarantee or security with the indebtedness of a third person to the cash companies in excess of 1 lakh rupees means you will be disqualified. Okay. This is applicable to all the cash companies. Okay. Okay, done. Next point, what they say is a person or a firm who whether directly or indirectly has business relationship with the cash companies may also be disqualified. What this is trying to say is that if there is a person or firm, person means auditor or the firm, either directly or indirectly. Directly means either the person or the firm, indirectly means either through relative or partner. If they have any business relationship, with the cash companies, then in such case the person or the firm will be disqualified to be an auditor. So what are these business relationships? Business relationship means any transaction entered for commercial purpose. If my company is Reliance Industries, okay, if I am going to audit Reliance Industries, if I get any good product or service from Reliance Industries, if I buy this, then it will be known as a business relationship. So any transaction which is done as a commercial purpose, then it will be termed as business relationships. So this business relationships also has some exceptions. So what are the exceptions is what we are going to see. It has two exceptions. The first exception, what they say is, if the commercial transaction is in the nature of professional services permitted, then if you have done a business relationships in the nature of professional services permitted, then it's okay. You will still be considered, you will still not be disqualified. What are the professional services permitted? So there are some professional services which are permitted and which are prohibited. That is what we understand from here. In our book, they have not given what are the permitted professional services. Rather, they have given what are the prohibited professional services under section 144. So what they say is, what are permitted professional services? All the services other than the prohibited services will be known as the permitted services. So for that we need to understand what are the prohibited services. It is given under section 144. So these are the services. Okay. So accounting and bookkeeping services, internal audit services, design and implementation of financial information system, actuarial services, investment advisory services, investment banking services, rendering of outsourced finance services, then management services and other services. All these services are prohibited. These services, if the person, partner or relatives gives these prohibited services to the cash companies, then in such case the auditor will be disqualified. He will be disqualified. Okay. So other than these services, any other services, if they give it to the cash companies, it's okay. If the permitted services they are giving, it's okay. They will still be considered as, the auditor will still be considered as a qualified auditor for the company. Okay. And the second exception is that the commercial transaction should be in the ordinary course of business, and if it is an arm's length price, then it's okay. You will still be considered as a qualified person. That means if I have a audit firm, okay, if I have an audit firm, we are 3 partners, okay, and I am partner B. So I have a home, okay, I have a home. Near my house there is a bakery, okay. So what has happened is my audit firm has got the audit of this bakery. My audit firm has got the audit of this bakery, and this is not like a small bakery which you see around. This is like a big company which is a bakery. Okay. So yes. So in this bakery they have got the audit firm has got the audit. What happens is, if I am the partner and if I live in this house, opposite to my house I have a bakery. So whenever as a partner of the audit firm, if I go to the bakery, without saying anything, flat 25% this bakery gives discount to me. Flat 25% they give discount to me. But what happens here is, the transaction is done in ordinary course of business only. When I went to the bakery, I only bought cakes. This is his ordinary course of business. That means the bakery to the other customer also he sells cake only. So that is his ordinary course of business. But to the other customers he never gives discount. Okay, only to me he has given a discount. That means it is not in arm's length price. What is arm's length price is whatever he charges to other customers, same amount he has to charge it to me. If the transaction fulfills the criteria of ordinary course of business and arm's length price, then such transaction will be exempted. Here ordinary course of business is fulfilled, but arm's length price is not fulfilled. So in this case, this firm will be disqualified to be the auditor of this company, because they have done some commercial transaction. Okay, and this transaction is not under exemption. Okay, exception, sorry. Okay, so there is another transaction where I go to the bakery, and when I go to the bakery, what I do is, this time I didn't go to buy cakes. Rather I am going to buy a land from the bakery. I'm going to buy a land from the bakery. Is buying a land is ordinary course of business? Is bakery sell land to everybody? No. That means this is something which is not in the ordinary course of business. Then in such case, my audit firm will be disqualified to be the auditor of the bakery. Okay, that is what is said in these both points. Okay, we'll move on to the next. In the next one, a person who is a relative is a director or is in the employment of a company as a director of key managerial person, then the person will be disqualified. Here what they say is, if I am an auditor, okay, if I am going to be appointed as the auditor, and my relative is either a director, if my relative is either a director or a director plus employee in the company, or he is a key managerial person in that company in which I am going to get my audit, in such case I cannot go to audit the company. I will be disqualified as auditor for that company. Okay, that is the F point. So in the next point is G. This G point I will explain you later. Okay, later in the chapter. The next point is H. Here what they say is, if a person who has been convicted by a court of an offence involving fraud and a period of 10 years has not elapsed, in such case he will be disqualified. Here what happens is, the auditor has been convicted. He has been convicted for an offence. And the offence what he has done is, it involves fraud. And the offence what he has done is, it involves fraud. Okay, if it involves fraud and he has been convicted for it, then he will have a 10 years ban. For the next 10 years, he cannot audit any firm. Okay, if the 10 years are completed, then he can audit a firm. Yeah, that is what is said in this point here. Okay, next is the section 144 point, which I told you, right? If you give this prohibited services, that means you will be disqualified to be the auditor. Okay, so in this what they say here is, in the case of individual, so there are two cases where the auditor can be individual or the auditor can be a firm. If they both give either directly or indirectly the prohibited services to the cash companies, then they will be disqualified. You have understood until this. Okay, now that we have completed the qualifications and disqualification, the next what they say is, if an auditor is appointed in a company, if I am the auditor, that is Bhavna, I am appointed in Reliance Industries. Suppose I am appointed in Reliance Industries, and after my appointed, if I have some disqualification, after I get my appointment, after that I incur some disqualification. In such case, I will have to vacate the office and leave from there. Once I have been disqualified, I need to leave the company and go. That means I have to vacate my office and leave from there. Such vacating of office will be known as a casual vacancy. Such vacating of office will be known as casual vacancy. So when a person appointed as an auditor incurs the disqualification mentioned in subsection 3, that is the disqualifications, after his appointment, then he shall vacate his office, and such a office shall be vacated immediately, and this will be known as casual vacancy. So this is what is casual vacancy. Next, what we are going to see is the appointment of auditor. For appointment of auditor, I am going to use my notes. For appointment of an auditor, I have split it into two parts. One is first auditor, then the other one is subsequent auditor. So we have two types of companies. One is a government company and the other one is a other than government company. Okay, so first we'll talk about first auditors. So in the case of first auditor in a government company, the Comptroller and Auditor General of India will appoint the auditor within 60 days of registration. Suppose the company has been registered, then from the date of registration within 60 days, who will appoint the first auditor in a government company? C&AG, we'll call them C&AG, Comptroller and Auditor General of India. They will appoint the first auditor. If suppose C&AG is not appointing within 60 days of registration, if it has failed to appoint, then the board of directors of the government company within the next 30 days, it will have to appoint. Okay, within the next 30 days, the board of directors will have to appoint. Even if within the next 30 days, the board of directors is not able to appoint the first director, in such case, the members shall appoint the director from 60 days from the failure of C&AG at the EGM. So, okay guys, I'll give you an example. So today a firm has been registered. This is a government company and we are talking about first auditors. Okay. Then within a span of 60 days, C&AG must appoint the auditor. If within 60 days it does not appoint, then within the next 30 days, the board of directors must appoint. If the board of directors doesn't appoint within 30 days, then within the next 30 days, the members should have a meeting, that is, should have a EGM, and in that EGM they will have to appoint the first auditor. Here what is written is members within the 60 days from the failure of C&AG. 60 days means from here to here. This will count as 60 days. From the failure of C&AG within 60 days. That is after the failure of board of directors, in the next 30 days it has to appoint. That is what is known as 60 days here. Okay. Done. So the auditor who has been appointed as the first auditor in a government company will hold the office till the first AGM only. He will hold the office till the first AGM only. After first AGM, they will again appoint the auditor. In other than government company, you don't have Comptroller and Auditor General of India. Directly the board of directors will appoint within 30 days of registration. Within 30 days, the board of directors will appoint. If they are not able to appoint within 30 days of registration, then in such case, within 90 days, the members have to appoint at the EGM. That means they'll get extra 60 days to appoint. Okay, that means within 90 days, the members have to appoint from the date of registration. That means after the failure of board of 30 days, before 60 days gets over, the members must appoint at EGM. The next what we are going to see is the subsequent auditor. And in the other than government company, he shall also hold the office till the first AGM. After first AGM, even in non-government company, they'll have an appointment one more time. Okay. So in case of subsequent auditor, again government company other than government company, the C&AG will appoint within 180 days from the commencement of the financial year. That means if today the financial year has started, that means today is 1/4, then within 180 days. The C&AG will appoint a subsequent auditor, and that auditor shall hold till that end of that AGM only. Okay, that means another 1 year he shall hold. In other than government company, the members will appoint at the first AGM. So when this auditor is being removed, at that time in the same AGM, the members will also appoint the subsequent auditor. Okay, and this auditor shall hold the office for 5 years. Okay, after 5 years only there will be another appointment, whereas in a government company, here 1 year only he will be appointed. From the next AGM there will be another appointment. Okay, I hope this is clear. Okay, next what we are going to see after the appointment of auditors is the pre-appointment and post-appointment procedure. That means when you are going to appoint an auditor, before that what the procedure the company has to follow, and after appointing the auditor, what the procedure the company has to follow is what we are going to see now. So first we see the pre-appointment procedure. So what is a pre-appointment procedure? So what it says is that company needs to get a written consent and a certificate from the auditor, which means that if a company is going to appoint an auditor, it needs to get two things. One is a written consent and the other one is a certificate. A written consent from the auditor that yes, okay, he is ready to take up the appointment, and that a certificate that he is qualified and not disqualified. That a certificate that he is qualified under section 141 subsection 1 and that he is not qualified under section 141 subsection 3. Okay, so this one he has to give. The other three things I'll tell you later. So just remember this, the company needs to get written consent and certificate from the auditor before appointing the auditor. After appointing the auditor, the company needs to intimate the auditor. The company needs to intimate the auditor that he has been appointed as soon as possible, and the company has to also intimate to the ROC that the auditor has been appointed in a form called ADT1. Within 15 days of appointment, they have to inform to ROC in the form ADT1. This is about appointment, they have to intimate to these both. This is post appointment. Okay, I hope pre-appointment and post appointment is clear. After that, the topic is filling of a casual vacancy. I have already told you what is casual vacancy. Casual vacancy means after appointment of auditor, if the auditor incurs any disqualification, he has to vacate the office immediately. Such kind of a vacancy is known as casual vacancy. So when a casual vacancy happens, it can happen in other than government company and also in a government company. So we are going to see from the company's point of view what the company has to do if a casual vacancy happens. So in other than government company, what has to be done is the board of directors within 30 days. The board of directors within 30 days, they have to appoint a new auditor. That is, fill the casual vacancy means appoint a new auditor within 30 days. Okay, this board of directors has to do in the board meeting. Okay, and whoever is appointed shall hold that AGM till that AGM only. Okay, hold the office till that AGM only. Okay, in case of government company, if they want to fill the casual vacancy, the C&AG has to appoint the auditor within 30 days. If the C&G does not appoint auditor within 30 days, in such case of failure, the board of directors will appoint the auditor by 30 days. Okay, this is when they have to fill a casual vacancy. Suppose, so the auditor here has done casual vacancy, but the casual vacancy by the auditor is not because of disqualifications or anything like that, but it is because the auditor has himself resigned from the office. Then this is something sensitive. Okay, when an auditor is going to resign by himself from the office, then the matter is something sensitive. In such case, by 30 days, the board of directors must recommend the auditor's name in the board meeting. Okay, they have to recommend the name. That name, after the name is recommended, within 30 days, the name which is recommended has to be approved by the members in the AGM. Okay, so in case of resignation, the board of directors will also conduct a board meeting, plus that name, whichever the auditor's name they have chosen, that must be approved by the members in the AGM. So this is the process for registration. So now we saw the casual vacancy, filling of a casual vacancy from the company's point of view. Now suppose there is a casual vacancy which is caused, okay, and now we are going to see, so this casual vacancy we are going to see from the auditor's point of view. What will the auditor do if a casual vacancy is caused by him and it is caused by resignation? At that time, what the auditor has to do is, after the auditor has resigned, okay, after that auditor has resigned, within 30 days, what he has to do is, he has to file a statement in ADT3. He has to file a statement in ADT3 to ROC and company, to the ROC and company in the case of non-government company, and the ADT3 to ROC, company and Controller and Auditor General of India, if the case is a government company. Okay, so that form he has to file. This is what is given here. If the statement he does not file, then in such case, in the case of failure, the auditor will have to pay a fine of 50,000 rupees or remuneration of the auditor, whichever is less. He has to pay that 50,000 or remuneration of the auditor, whichever is less, he has to pay that fine, and this fine may be extended up to 5 lakh rupees. Okay, this fine may be extended to 5 lakh rupees. This is what is said here in the casual vacancy by resignation. Okay, Next, what they have said is, when you are going to reappoint an auditor, that is subsequent appointment of an auditor, the auditor, when this is of the same auditor, if you want to reappoint the same auditor, that means these are a few cases where you can't reappoint the same auditor. When you cannot reappoint the same auditor is when first he is disqualified. That means you cannot appoint the same auditor this time also. Second, if the auditor himself gives a notice in writing, that he is unwilling to be reappointed. He himself doesn't want to be reappointed in the first place. So then you cannot reappoint the same auditor. Third one is that if in a meeting you have passed a special resolution that you are going to appoint someone else as auditor, then the same auditor you cannot reappoint. That is what is given here. Okay. So auditor can't be reappointed in three situations. One is if he is disqualified, in the other case he has given notice that he is unwilling to be reappointed, and in the third case if the company itself has passed a special resolution that they are going to appoint someone else. In these three cases the same auditor cannot be reappointed. Okay, and there is also a provision where they say if at the annual general meeting a new auditor is not appointed, that means until that the old auditor shall continue his office, and after the new auditor is appointed, the new auditor shall take over. Okay, I hope you understand this. The next topic we have is the rotation of auditors. Okay, so this topic will be the last topic for the video. We'll end the video with this topic, and then there will be a part 2 of this chapter. Okay. So what is rotation of auditors? Why this topic first came into place is what we are going to see is. So in old Companies Act, how it was is an auditor can audit the same company for 40 years, 50 years, 60 years, how many years he can audit the same firm. What started happening was that when the same auditor was auditing the company for 40 to 50 years, this auditor started developing familiar relationships with the company. So what happened is when the company had minor frauds or had some mistakes, the auditor did not tell it to the government. Why? Because what he thought was, why should I say this minor fraud and all? It's okay, let it go. If I tell it, then my relationship here will get spoiled, right? With the company will get spoiled. So why should I say? Like that he thought, and he did not say it to the government at all. So frauds like this started happening. So finally when the new Companies Act of 2013 came in, they brought in a provision where they fixed a period that auditor can only audit the same firm till this period only. So if he is an auditor and he wants to audit a company, and if this auditor is an individual, he is not a firm, okay, and if he is an individual, he can audit only for 5 years. After 5 years, he cannot audit the same company. He has to take a break for 5 years. So I'll explain this concept in detail now. So what happened was that there was this person, he is an individual, suppose. Okay, he was auditing a company. So what happened was that when the new Companies Act came, they told the same auditor can only audit the company for 5 years. So he can only have a tenure of 5 years. Tenure of 5 years means only for 5 years he can audit the same company. After 5 years, what he has to do is the next 5 years he must not audit the same company. It will be his cooling period. And after this cooling period of 5 years is over, then for the next 5 years again he can audit the same company. So 5 years gap they brought in between, and this 5 years gap was known as the cooling period. Why did they bring in this cooling period? Was because to stop such frauds, to stop familiar relationships developing between the auditor and the company. Okay. So yes, so if in the case of individual, his tenure is 5 years, and after that he'll have a 5 years cooling period, and a tenure of 5 years. Okay, for this tenure of 5 years, he can audit the same company. For the next tenure of 5 years, means for the next 5 years, he should not audit the same company. He can audit any other company, but the same company he should not audit. There must be a gap of 5 years. After the gap of 5 years is completed, the cooling period is completed, again for the next 5 years, he can audit the same company. It's his wish, okay. In the case of firm, what they told was that in case of firm, you will have a tenure of 10 years. That means you can audit a company for 10 years. Then after that, you need to take a break of 5 years as cooling period. You must have a gap of 5 years. In this 5 years, you must not audit the same company. Then after the 5 years is over, again for 10 years, you can audit the same company. So the 5 years cooling period is something which they brought in to solve this problem. This is what the New Companies Act said. Okay, so this 5 years cooling period is there. No, it is not applicable for every company. Okay, this 5 years cooling period, it is not important that auditor has to follow this in every company he is going to audit. Okay, so what are the companies in which the rotation of auditors is applicable? This is rotation of auditors. This concept is known as rotation of auditors. So it is applicable in unlisted public company where the paid up share capital is 10 crore rupees or more. In private limited company where the paid up share capital is 50 crore rupees or more. In companies where the paid up share capital is below the threshold limit, it is less than 10 crores, less than 50 crores. Okay, but what happened is the public borrowings are deposited by these two companies. If it is 50 crores or more, and even though this threshold limit they do not fulfill, but they fulfill the threshold of public borrowings and deposits being 50 crores or more, then such companies, even though they are unlisted and private and they do not fulfill the threshold criteria, if they have public borrowings and deposits of 50 crores or more, they still will come under the concept of rotation of auditors. Next, listed companies will also come. Here, which company will not follow the rotation of auditors? They have given exclusion. It is one person company and small company. Okay. So next is the tenure. I told you already. Individual, for individual, it is one term of 5 consecutive years. 5 consecutive years, and for a firm, it is 2 terms of 5 consecutive years. So 10 years. That is what is 10 years I told you. So here you should not say as 10 years. It is wrong. You must say 2 terms of 5 years or 1 term of 5 years. So here it is 2 terms of 5 consecutive years. Okay, and if this term finishes, if this tenure finishes, they have to go into cooling period of 5 years. That is, in this cooling period, they can't be reappointed as an auditor in the same company again. Some other auditor has to be appointed. Okay, so what is the next is given? Ineligibility means if the individual or the audit firm, okay, if they have some network firms, if they have some network firms, then those network firms can also not be appointed as auditor. So I'll explain you this concept. Suppose there is an individual. Okay, there is an individual. His name is A. Okay, he is a partner in 2 firms. He is a partner in 2 firms, which is ABC Limited and DGA Limited. He is a partner in 2 firms. So what happens is ABC Limited gets appointed as auditor in Reliance Industries. Okay, what they do is they audit the Reliance Industry for two terms of 5 consecutive years. That is, for 10 years this firm has audited the Reliance Industries. So once the 10 years is over, now what they have to do is, now they have to go to their cooling period. Means now they cannot audit the Reliance Industries for the next 5 years. What was happening here was that the A Limited and this firm was helping Reliance Industries to do some fraud. Okay, they did a fraud for 10 years. Now what has happened is, in the next 5 years they can't be reappointed, right? So Reliance Industries still wants to continue the fraud. So the Reliance Industries goes to A and asks for suggestion. What A says is that, listen, one of my firm can only not audit your company, right? But I have another firm where I am a partner. It is known as DGA Limited. Okay, what we'll do is, for the next 5 years to continue the fraud, ABC cannot be appointed, but DGA we will appoint and will continue the fraud. Okay, so because he is a common partner in both the firms, he is trying to continue the fraud with Reliance Industries. So when this situation arose, the lawmakers became alert, and what they did was, they again brought in a provision where they told that if a partner is a common partner in 2 firms, if he is a common partner in 2 firms, then such firms will be known as same network firms. Means ABC Limited and DGA Limited will be known as same network firms because they have a common partner called A. That means if in the same network firms, even if one firm is being disqualified, and if the other firm is there in the same network firm, they will also be disqualified. That means if ABC Limited is a firm and it is disqualified to be auditor of Reliance Industries, and in the same network firms there are few more firms called DGA Limited, ZXA Limited, like that they have more firms where they have common partners. That means all the other firms will also be disqualified. This is what they are saying. Same network of firms will be disqualified. So same network firms can be developed by common partners, or what they say is if you have a same trade name or brand name also, it can be developed. So yes guys, we have come to the end of the video. So the remaining part of company audit will be uploaded very soon. And if you like this video, please like, share and subscribe. Thank you so much for joining in today.